So here's a fun thing to talk about. Since the TurboTax incident, it's the dirty dozen of tax scams. The IRS annually picks the worst of the worst. Every year, IRS Revenue picks a list of 12 worst scams that it is seeing. While many of them peak during tax seasons, others can come calling at any time. Phone scams, number one. Aggressive and threatening phone calls from criminals impersonating IRS agents making a repeated appearance on the list of this year, with scammers threatening potential victims with arrest, deportation, and just about everything else to personal and financial information. Since October of 2013, IRS has received reports of over 290,000 bogus phone contacts, and as known as at least 3,000 victims who have lost a combination of $14 million. IRS says this all the time, but they can't say it enough. They never call taxpayers out of the blue. If you get a call from someone claiming to be an IRS agent on a matter you're not really aware of, they're scamming you. Number two, phishing. Fake emails or websites looking to steal your personal information are a perennial on the dirty dozen list, since the information is often used to file bogus tax returns. Again, IRS won't send an email about a bill or a refund out of the blue, and almost never request personal financial information other than through the mail. They ask people who receive suspicious communications to forward them to their website, phishing, phishing at irs.gov. Number three, identity theft. An enormous problem for IRS and taxpayers. Tax-related identity theft is another repeated offender on the dirty dozen. While the IRS has made significant strides in fighting identity theft, including creating a special identity protection PIN for victims, taxpayers need to do more of the heavy lifting themselves by being vigilant against phishing attacks, monitoring their financial accounts, and otherwise protecting their information. One tip they may not be aware of is filing their tax early in tax season may prevent identity theft from filing in your name under your Social Security number. Number four, return preparers fraud. While the IRS is quick to note that the vast majority of tax preparers are honest, a very small minority of unscrupulous preparers are making the list this year, setting up shop to steal taxpayers' information for refund fraud, identity theft, and other scams. One common tip-off, promises of outlandish large refund. Number five, hiding money or income offshore. While the IRS offers occasional voluntary disclosure programs for money held inappropriately overseas, it is also happy to conduct audits and pursue criminal charges on these cases. So it's a warning to taxpayers not to be lured into thinking they can hide money outside the country. And even if the money is legitimately held out overseas, there are reporting requirements that must be met. Number six, inflated refund claims. Taxpayers may be fooled often by unscrupulous tax preparers into making claims on their tax returns that aren't supportable. In some cases, the preparer may even have the tax preparer sign a blank return. Then the preparer does two tax returns, one with a smaller amount of refund, which they show the taxpayer, and one with a larger claim, which they submit to IRS so they can keep the difference between the two refunds. It's important for taxpayers to remember that no matter who prepares their return, the taxpayer is responsible for it. Number seven, fake charities. One of the most distinguishing entries in the Dirty Dozen is a range of groups and individuals that masquerade as charities to attract donations that go straight into their pocket. They often pop up in the wake of disasters and tragedies. IRS recommends checking out the charity of interest with its EO Select check feature, which can help them find legitimate charities. What they're saying is, if it's not a 401c or 501c, then it's not a legitimate charity because it's not been authorized by IRS. So make sure that you give the money to the correct charity. Also, giving money directly to another country is not deductible. You need to give the money to a legitimate charity in the United States and then have them transfer the money to the other country that needs the help. Number 8, filing fake documents to hide income. Filing phony information returns like 1099s or W-2s or other fake documents in an attempt to lower taxable income is a repeated offender among the dirty dozen, with scammers often offering a falsely information. Some will even attempt to claim zero wages, possibly as part of a frivolous argument against the entire tax system. None of these will fly with IRS, however, which has been weeding out these types of tax scams for years. Number 9, abuse of tax shelters. Another time-dishonored member of the dirty dozen. Abuse of tax shelters and complex tax avoidance schemes may take new forms all the time, but they remain illegal. A common version now involves hiding income in foreign jurisdictions and then accessing it through credit or debit card here. Number 10, falsifying income to claim tax credits. Inflating one's income to maximize refundable credits is never a good idea, however tempting. As the number and the complexity of credits increases, this has become even more attractive area for scammers, unscrupulous preparers, others to recommend misreporting income to qualify for everything from earned income tax credits to the most exotic of government incentives. Once again, it is important to note that the taxpayer is responsible for what's on their tax return, and that IRS is getting better and better at sniffing out this sort of thing. Excess of claim for fuel tax credits. The fuel tax credit is generally limited to off-highway businesses use or in farming, and so it is not available to most taxpayers. But that hasn't stopped scammers using and promoting it as a way to lower your tax bill. Fraud involved with the fuel tax credit is considered a frivolous tax credit claim and can result in a penalty of $5,000. So no matter what a scammer might suggest, it's not worth risking on a tax return. Number 12, frivolous tax arguments. Our favorite of the dirty dozen, the frivolous arguments that some use to try to avoid paying their taxes never fails to amuse. They range from the absurd claim about early colonial American history to bizarre theories about the meaning of income. But they all have the same thing in common. They're scammers who will often sell books, videos, and other material about their frivolous arguments, marketing them as a surefire way to lower your tax bill. But the IRS has collected a long list of them that they have completely debunked in court. You can see this on IRS's website, the truth about frivolous tax arguments. I hope this has been entertaining and also informational. The truth of the matter is, IRS is only trying to collect legitimate taxes. But when you try to go around them, you're going to find yourself in trouble. So be careful when you prepare your tax return, but take all your deductions you're entitled to. Thanks very much for watching.